Hello and welcome to this webinar with Emerge One and Talent Edge. I'm Arish Shah, joined in the studio today by Alex Laurent, Managing Director at Talent Edge, and we're here to talk about what commercial decisions are CFOs prioritizing over the next 12 months. Apologies to those of you that were trying to get onto the LinkedIn Live. Sadly, LinkedIn let us down, and so we have cobbled together a live stream via YouTube, and hopefully you will be able to access it. And even if you don't, we will be releasing, obviously, the recording hereafter. In the meantime, Alex, really great to have you in the studio, and I'm really looking forward to this.
Yeah, cheers, Iris. Pleased to be back again.
Yeah,
really good fun.
Amazing. And obviously a massive shout out to Launchpod Studios over here in Mill Hill for saving our bacon, I guess, on this one. Anyway, tell me what's been going on from your perspective.
What's been going on at Talent? It's been really busy, which is good. Really busy in the UK, which is nice. Continued growth in the US as well.
Yeah.
Yeah, just constantly just pushing. So it's good fun.
And like mainly sort of senior level roles, kind of CFO, FDs, those sort of.
Yeah. Well, a bit of everything really. Obviously, I'm still tending to do more of the senior stuff in both New York and London. So we've got a really good flow of roles on both sides. But you know, the guys in the team that sort of do the mid-senior level as well, and also our junior teams also. So everyone's really busy, which is nice, especially this time of year.
Yeah.
You know, traditionally it can slow down, right, recruitment over summer. So touch wood, we've not really seen that yet, and hopefully don't.
Yeah, I'd say kind of similar from our side. You know, things can always be always be better, but I think what we're seeing is certainly from a VC perspective, the trend has been fewer businesses getting funded, but those businesses that are getting funded are really super high quality. So we've been working with really exciting teams. That are building just frankly really astonishing stuff at the moment. So but there is a lot of discourse about what next, because in these crazy times we're living in, there is there's always a conversation to be had.
Yeah, for sure, 100%.
Yeah. So what are the sort of things that CFOs are telling you at the moment?
Whole mixture really. I mean, obviously, as you can imagine, pretty much every conversation we have has some form of AI component around it. You know, whether that's a CFO who's looking to make a hire for their team and is requiring some level of experience from a candidate incoming, or equally if we're doing more on the actual candidate side, talking to a CFO about their experience and how they can sort of bring that across to a new business. So loads of chat around AI, which obviously we'll get into in a bit. We're hearing a lot around, how people are sort of, planning the next 12 months in terms of headcount. And again, factoring in AI and what that's doing to, what hiring looks like, in terms of the volume, number of hires and things like that. Obviously that growth versus profitability sort of, component is still there. Cash management, usual. Yeah. How about you?
Look, I mean, let's pick one of those topics, right? Growth versus profitability. Growth versus profitability has been, talked about over the last few years, certainly kind of post 2021, 22. That's when it started becoming more salient. I think for truly venture-backed businesses and truly venture scalable businesses, it's less of a conversation, certainly from investors. But the thing that I think people have to internalize is, if you are building a venture scale business, it is no longer sufficient to just be growing like the clappers. Like at least at the unit economics level, people are expecting profitability, if not at the net level. But there are a ton of businesses that are kind of trapped in that sticky middle, not really growing quick enough to raise a new round of financing, but starting to move towards kind of having a profitable business. And I think for those companies, it makes sense to move towards that profitability, because it just means that they're able to control their future a bit more, see if they can reset, get to the sort of milestones that potentially would unlock, the next round of financing. But I don't think it's a binary question. I think there are some businesses that are growing like the clappers. You know, I spoke to a VC recently. I think, you know, he mentioned it. 2-man team had gone from like 25,000 MRR to 100,000 MRR in the space of a couple of months.
Right.
And you know, should end the year, or not even end the year, like within the next few months might triple or quadruple that sort of number. So I think, you know, in true venture style, like, businesses with venture scale outcomes are still growing, right? And therefore they're still exciting, and therefore whether or not they are profitable is kind of irrelevant for the time being. At the unit economics level, they still need to be showing that they can grow profitably from that perspective at the very least, right? So yeah, I don't think it's binary. I think, you know, really that kind of flight to profitability probably happened a lot more for kind of SaaS type businesses that raised funding in 21, 22, who, you know, are no longer kind of the darlings of the venture world. You know, so they've now got this dual kind of issue where they've got to figure out how they can, you know, make them AI, you know, make their businesses AI first, right? Which obviously, you know, is critical today. But B, given where funding is, and like, you know, the numbers show very clearly that the number of businesses, certainly in the UK, getting funded has shrunk remarkably. Like, it's about 50% off where it was a couple of years ago. But those businesses are raising larger amounts of capital, right? So if you want to participate in that ecosystem, you've got to figure out how to both show those sort of venture style growth metrics, but equally that you've got a steady hand on the ship. And just, you know, I think I saw a post, I think it was Harry Stebbings, you know, and one of the things he said is, you know, it's no longer good enough to be doing 1 million at Series A. You've got to be doing 3 million.
I saw that.
You've got to be doing 3 million, and you've got to be growing like the clappers, right? So the goalposts have shifted quite considerably, I would say. But, you know, these are questions that should always be under consideration, right, in the business, and that's where kind of, you know, CFOs like us come in to help founders figure that out. But the other, and I think just to close this kind of point off a little bit from my side, the other thing that we're seeing a huge amount of is the sorts of businesses getting funded, right? Are, you know, certainly in the UK, you have 3 buckets, but 4, I would say, really. So AI, which is kind of a catch-all for a lot of stuff. You then have fintech, which has always traditionally been, you know, a really strong sector here in the UK. And then next up, life sciences. So anything around kind of health tech, I guess, but, you know, life sciences is much more kind of pharma driven, where obviously the kind of usage of AI has you know, been increasing year over year in any case. And, you know, DeepMind is the obvious example of that, and AlphaFold. But and the other bucket is kind of deep tech, space tech, hardware. You know, so we're seeing lots of kind of really purely R&D driven businesses at the moment who are maybe a little way off of commercialization, or they have longer commercialization cycles because of, you know, either regulatory concerns or regulatory requirements, or just because the R&D takes, you know, that much longer. And therefore, you know, that question of growth versus profitability is not even relevant, I think, to some extent, right? So, so I think it's, as always, every individual business and circumstance will have a different answer. Yeah,
mate, completely agree, to be honest. And I think that, you know, that's what we've seen over the last sort of couple of years, certainly at Talent Edge as well. You know, ideally, well, not ideally, but normally you'd hope to see a bit of a trend within sort of particular stage, size, you know, vertical, but it just doesn't really happen, which has always been quite interesting for us. And I mean, again, in the UK predominantly, right, the pre-seed seed market is really strong. The graduation rates from seed to Series A or Series A to Series B, like, you know, Carter puts out really great information around this sort of stuff. But that has slowed down, right? And there are fewer companies progressing from early stage to kind of later stage. And those are exactly the sort of times where those sort of questions become really critical. So it'd be interesting, Iris, to understand, you know, the sort of AI specific conversations you have, with your CEO clients
Yeah.
around, just how they adopt and things like that?
I think the answer to that question is that they don't know, right? And often we don't know, right? And let me kind of explain that a little bit, right? So we're currently about to start working with a company where a CEO has come in and said we want to fully agentify finance. A lot of the businesses that we work with are trying to, see where they can adopt AI within finance as well, maybe at smaller scale. But then we work with fully agentic businesses, right? Literally businesses that are selling agentic services that are not even considering agentifying finance, right? And that is telling in and of itself.
Yeah.
And I think the problem is, whether it's founders, whether it's finance professionals, they go onto LinkedIn, they go onto Instagram, wherever, and they're seeing, okay, we're using Claude Cowork for this, or we've, put in OpenClaw, or we're running agentic workflows, and there's this sort of panic almost that arises where CFOs and other financial professionals are like, oh my gosh, we're like really way behind here, like we need to do something. And when I have this conversation with our CFOs, I say, well, hold on a second. Like, first of all, there was a meme that went around like a few months ago, right? 83% of the world's population has never used AI, right? Of the balance, the majority of people are using it as a replacement for Google, right? So they're just going on to ChatGPT or Claude or whatever and just saying, where's the best restaurant in my area, right? There is a very, very small percentage. I think it's 0.1 or maybe it's 1%. I can't remember exactly, but whatever it is, it's a very small percentage that are even paying for those tools, right? And then there's an even smaller percentage that actually understand how to get the best out of those tools, right? So this panic that, we're behind and we need to do something, I think is a little bit, has been inflated by kind of social media, right? And then if you then ask the real question that I think these people should be asking is, why should we agentify finance, or what is it that we're looking for as an outcome? You actually come to very, very different, you will have a very different perspective on what it is that you want to do. There's one client that we're pitching where we think, potentially it's not about automating or agentifying. It's like just a better spreadsheet with some rules, right? There are other companies where we're like, okay, well, you're using a variety of FP&A software, really solid ERP systems. Are you getting the most out of those? And some of those also have AI built into them. Do you need to agentify outside of that, or do you just need to use those tools better? One of the things that I am really concerned about is, this rush to use AI within finance could be really detrimental for those companies, because one of the things that's been proven again and again with AI within finance, and it's getting better for sure, but it's not there yet, is that it is not 100% foolproof, right? Now, as a CFO, I can't go to the board with numbers that are 80% correct, right? I'd be fired within a second. Equally, even if I get to a point where, I can, I don't know, if the team can do the month-end close a day cleaner, like we're talking to a company that is closing on day 5, which by any other metric is astounding, right? Like working day 5 is pretty damn good. Now, they may shave a day or a day and a half, or 2 days, let's say, off their close time. But then how much time are they going to actually spend analyzing and ensuring that the numbers are correct, right? Because essentially it's going into a black box. You don't know. And a great example of this is, again, a client said to us that they did a reconciliation within Claude, sent it to the auditors, and the auditors sent it straight back and said, we can't use this because there is no audit trail. We can't see how it came to these numbers. The numbers might be 100% correct, but
it's the background.
But it's the background, right? So I think, my advice always is look at where you are doing repetitive, low value tasks low value but essential tasks, right? And that could be a reconciliation, could be receipt capture, it could be something else altogether. And see whether you can, build an agentic workflow to deal with that.
Yeah.
Then move to the next one. But I think what a lot of finance professionals sometimes think they should be doing is somehow building a full, a replacement ERP system, or some all singing, all dancing kind of application. But I think this is the kind of mythology of AI, right? AI is such a broad term. Actually, in finance, it's workflows, right?
Yeah.
And whether those are AI powered or not is kind of irrelevant as long as they get the job done. A great example of this is, dunning flows like data management. We had a client say to us, maybe that should be agentified. And we said, well, hold on, you're using a system that already has that built in, has templating built in. Can you use that? If not, there are companies like Chaser that solve this with SaaS. Like, you don't need to reinvent the wheel for everything.
Yeah.
And then the final point with all of this is, no one really understands how much it's going to cost and whether that ROI is truly there. We've seen Uber has spent its entire annual token budget within the first 5 or 6 months of the year.
Yeah.
Like, that is astounding. There was, and I don't know how apocryphal this is, but there was a company that supposedly spent $500 million on tokens in 1 month, right? So people are still grappling with this idea of whether there is a time saving, a cost saving, or both, and actually where is the most appropriate application. Now, that's just within finance, right? Outside of finance, of course, there are areas that you could, implement agentic workflows, right? And I've done that within my own business in varying ways. The one thing, for example, and I'm relatively kind of OCD about communication. I won't let AI touch the external world in terms of communicating with other people, because I don't think that it necessarily either captures my tone or necessarily is sensible in what it's writing, right? So it may draft an email for me, but I would say in 70% of the cases where it drafts, I will not just sense check it, I'll rewrite it, right? And actually, one of the things we're seeing now, I had a guest on my podcast who's written a book called Super Skills, which is about the human skills you need in a world of AI. And one of the things he talks about is this concept of synthetic seniority, which means that people with no background are now using AI and therefore kind of assuming that they've understood, but they haven't learned, and they're trusting that the AI is correct. So we are getting emails, like when we're pitching a client, maybe we're getting emails that are clearly AI written, where again, 40-60% of it, you're sort of sitting there going, what are you actually even asking here, and why is this relevant? So I think you've got to be really careful. Now, that's kind of the negative side of AI adoption from my perspective, from a finance perspective. But actually, where it's obviously massively positive is that it can reduce time, increase speed, increase productivity for whatever that word's worth in an incredible way. It's again just about finding the right applications within your business. Yeah. Right. If you're a coffee shop owner, for argument's sake, right, and I know we're predominantly talking about venture here, but if you're a coffee shop owner, like, you don't really need a huge number of agentic workflows. Or conversely, maybe you do, in terms of scheduling, right? Staff scheduling or ordering or supply chain management, all that sort of stuff. So yes, there are areas, right? If you are a venture scale business, right, and you are scaling teams rapidly, I could see, hundreds of potential use cases, right? Onboarding, offboarding, from an HR perspective, finance we already talked about. From an operations perspective, it might just be about, how contracts are sent out or how you engage with suppliers. It might be about, highlighting KPIs or metrics. There are all sorts of kind of areas where AI can be useful. But I think for each individual business, you've got to figure out what is the outcome you're looking for, and then work backwards from there.
Yeah, mate, I completely agree. And I mean, it's a conversation we've had a lot this week alone. It's about, for me anyway, at what point do you what point do you bring the human judgment around AI? You know, so if there are, you know, more lower level tasks, as you say, you could probably just let it run and work on those. But, you know, at what point would you have to review? You know, are you going to use AI completely to prepare your board deck that goes to your investors without being checked? No, of course. So it's a conversation we've had. I mean, I think we've got 2 interviews, both happening today, actually, where that is going to be, they've already discussed AI and, you know, the individual person's adoption of it, what they've done, what they've built, and how, you know, it's been beneficial across the function. But the second part of the conversation is around, okay, but how far do you trust it?
Yeah.
And how far are you going to trust it in 6 months' time? What do we need to do to get there to increase that level of trust? And then sort of almost like shorten the review time that the human spends on it. But how long until we actually get there? Do you know what I mean?
Yeah. No, that question of like trust is like, and I talk about it all the time. Like, you know, as a CFO, do you want a black box in your boardroom or do you want a human being? And actually it's trust. And then more importantly, accountability, right? Because if the AI fails, like what are you going to do? If your CFO fails, like there's something you can do about that, right? I think the other thing here is, you know, I've talked about human in the loop a lot. Someone reframed that and talked about human in the lead. And I think that's actually where we need to get to, right? Because especially within finance, as I said earlier, right? Like if I can't trust, or if 80% or if 20% of the time I can't trust the numbers, or the numbers are always 80%, you know, correct, but not 100% correct, that's problematic. So therefore, you know, you've got to spend the time understanding where the value sits. And that is in judgment. Now, the problem that we are probably going to face here, and I think this is true of legal, finance, and any kind of professional realm, is what AI essentially does is it removes the lower level tasks, right? The transactional stuff, the data entry, you know, anything that is, again, repetitive, etc., right? But what that means is you don't have more junior people coming through the system and learning.
Yeah.
And therefore, in 10 or 20 years' time, you may actually be in a situation where there just aren't enough people at a senior level who have learned enough to be able to provide the judgment, the strategic advice that come on top of those numbers or on top of the contract that's been written, right? Because you know, and I say this all the time, the advice that I could be looking at 2 identical businesses in terms of what they do, even their shared, you know, their cap table structure. But if one founder is 25 and one founder is 45, the advice that I'm likely to give them may be quite different, right? Because it depends on the profile. And I don't think we're in a place yet. Well, I think a lot of people would argue that we are, but I would argue that from a trust perspective, I'm not sure that you should be trusting all your company's data in this black box, right? And so many of these conversations, especially at the kind of strategic level, aren't captured. They're not on emails, right? They're conversations had at the coffee shop or in the boardroom that are closed, right? Or they are a call with your investor. Which, okay, today you might be using Granola or an equivalent tool to record that, but more often than not, you're not, because they're ad hoc, they're not necessarily planned. And therefore, I think, you know, these systems don't necessarily have all of the context to come out with the result that is most appropriate. And that's before we get onto what is the cost of all of this again. Right?
Yeah. It's interesting as well, because we sort of hear sort of different types of perspectives in London or the UK, but also in the US.
Yeah, sure.
Because a lot of the conversations we're having at the moment in the US, they seem to have a lot more trust in it already.
Yeah.
You know, and there's a lot more sort of, you know, terminology and almost like new job titles and job roles, you know, that are being created in the US by accountants, where it's sort of focusing around like finance engineer or accounting engineer, but also sort of what goes into, you know, that type of role and profile. So it's really interesting, but it seems like, you know, one side's a little bit more trusting or a little bit further along in that journey than the other.
Yeah, I mean, look, the US is always going to be that much more bullish, right? Because it's in the midst of it, right? But it's a really interesting thing here, right? And like, again, as I say, we're being approached by clients that want us to come in and build out, you know, systems potentially for them. And we're fortunate enough that, you know, we have a couple of people that have vibe coded or built out workflows or whatever, and are kind of very tech forward and therefore can do this sort of stuff. But, you know, most finance people have dabbled but have never built.
Yeah.
Right. I think is probably the way I would put it. Right. And of course they're smart and they're quick and they can pick this up quickly. But for those sort of roles that you're talking about, like finance, engineer, etc., like, again, I want to reiterate, it's so early, right? So the person that you might hire today with a grasp of the skills that are required today may not be the skills of tomorrow, right? And again, the problem is that we're seeing such an evolution, such a rapid evolution of this technology, that unless you are really focused on that, it's hard to keep up. And what does that mean? It means that that finance person has probably pivoted more towards a kind of AI stroke build kind of profile. And therefore that then means, well, okay, how au fait are they with the finance side? And we have this argument again with clients where they're like, okay, but we want a all-in-one solution. Like, you know, we don't want to have to hire an agency to build out stuff. We want to keep it. And our response to that is, look, you're either going to get a finance person that is okay building stuff, or a dev agency that doesn't understand finance. That's why you need both, right? You need the person with the finance skills and the skill set that understands the depth of the workflow and what are the contingent, what are the contingencies that you need to be looking out for? What are the exceptions? What are the rules? And then you need someone who's competent building, right? Because I can vibe code stuff and I have vibe coded stuff. Is it, you know, is it something that I would release into an enterprise environment? Probably not, right? Like that's a reality. But, you know, I think it would be absolutely ludicrous to suggest that we're not going to see more of that. Right? Like those sort of roles are gonna become more and more critical. And I think, you know, as people continue to hire CFOs and, you know, finance controllers, et cetera, they are going to be looking to see what they've done in that space beforehand. So this is not me pushing against the tide. All I'm saying is, you know, you've got to take the appropriate approach, which is understand what is the problem you're trying to solve, and then what is the best solution for that.
Yeah, and you know what we've seen a lot, especially this year, last year as well, but definitely this year, both London and New York, is people, so whether they're, you know, an out business partner, or, you know, if they're perhaps someone who's more on the sort of accounting or control side of the fence, but people who are really strong business partners with product and engineering teams. So people who can actually have a seat at the table, be taken seriously by the product and engineering people, as opposed to, you know, the historical stereotype, you know from finance type thing. But people who can actually sort of talk that talk with these guys and have a real say into like how the workflow, how you automate the workflows, both from a finance perspective, but from the product perspective as well. So that ultimately, you know, everything runs seamlessly. So we've made a lot of placements like that in London. And to be honest with you, that is also, you know, one of the key requirements that we're getting asked a lot for, alongside, you know, AI adoption. As a little bit of a workaround to an extent.
And I mean, frankly, like, going back 8 years, I remember sitting, you know, with the product teams in various businesses that I work with and making a point of both understanding the product, but also talking through the finance side of things so that they could integrate that correctly. I think if you're working in a tech business, you need to understand how product works. You need to understand, you know, it's always the case that finance sits across the entire business. And in a tech business, product and engineering are the most important aspects there. Now, does that mean you need to learn how to code in Python, or do you need to, you know, do you need to know how to build an agentic or an agent from scratch? No, but there are tools now that enable you to do that. What you need to understand is, you know, how is a product built? What are the iterations that you go through? What is the process that you go through? And how do you break down the problem into its, and it, you know, so in that sense, nothing has changed, right? It's still about taking a problem, breaking it down into its constituent parts, and then building that out from scratch. And I think the difference that AI has meant is that someone like me can now do that, whereas before I would have had to have hired an engineer to do it, right? But I can build workflows using tools like NAN, and where I need code built to go into those tools, I can just go to Claude and say, okay, right. Actually, I can go to Claude, say, here's the problem. This is my solution to it. These are the steps that I need it to go through. And it will build me the entire workflow from scratch, right? So I think as long as you're confident enough to trust your thinking, you're obviously always going to have to problem shoot afterwards. You can figure out how to do some pretty impressive stuff, but as someone steeped in finance, you would hope that your CFOs and your controllers and heads of finance, etc., are at their core really good at problem solving, because that is kind of the role of finance anyway. And if they're good at problem solving, then they should be able to translate that into something that product and engineering can grapple with if they're not able to build it themselves.
So how do you think that sort of flows into like general hiring strategies for sustainable growth?
Yeah, look, I mean, I think that changes from business to business always, right? Like I think the core of finance has not changed, right? Finance operations is still critical, business as usual. You still need bookkeeping to be done one way or the other, whether that's, through flows or whatever. You need people reviewing that. You need people reconciling that. You need people then building out your management accounts and your cash flow reporting and making sure that your numbers are clean and all the rest of it. And you need you potentially in bigger businesses you also need the kind of accounts payable and accounts receivable that goes alongside that. You need the business partnering side in bigger businesses and enterprise kind of clients, which is where I think a lot of this kind of AI implementation will end up sitting, right? Because it's how can finance work with individual functions within the business. And then obviously you have your sort of strategic and forward-looking, so FP&A, CFOs, FDs, etc. Right? So I think that the reality is that finance is, finance is always considered this kind of monolith of it's finance, right?
Yeah.
It's not. Like I wrote a post about this the other day. There are probably about like 20 different roles within finance that you can point to, each of which actually have value in and of themselves, but also are an ecosystem whereby, I can't do my work as a CFO if there isn't, if there's no finance operations functioning well, because I can't trust the numbers. If I can't trust the numbers, I can't make decisions or I can't propose decisions, right? And therefore I become redundant as well. So all of this needs to work together. I think what changes is that maybe some of the really kind of grunt work gets more and more automated away, and you start moving up the stack, right? So if you think about finance as a pyramid, you have at the bottom, you have the transactional layer. Most of that has been resolved by SaaS and or AI, right? In the middle, you kind of have the slightly more strategic stuff around FP&A, treasury management, et cetera, which again, either been solved by SaaS or being solved with agentic or AI first kind of businesses, or hybrid kind of AI and SaaS. And then at the top, you have the judgment layer, and that's where the kind of CFO sits. And so where I think it heads is you'll have people managing the transactional layer, but in a lighter touch way, focusing more on the kind of FP&A, forward-looking, treasury, et cetera kind of level. And the judgment still sits with a human being, at least for the time being. We may only be 3 years away from that being, AI'd away, but we're definitely not there yet. Do I think it's going to lead to massive cuts in finance teams? I don't know. I think the jury's still out because, let's assume that you agentify lots of stuff. Your business becomes more efficient. Hopefully your business grows. As your business grows, you need more people, right? So it may delay hiring, but I don't think it replaces it altogether. Yeah.
And to be honest, we were talking about this before we came online, right? We haven't seen a slowdown, at Talent Edge in terms of, number of roles that we're taking on. All we've seen is a slightly different requirement from that hiring company. And it typically is around, some of the points I've mentioned. So could this person sit down with product and engineering? That's really important. and, you know, what have they done so far? And if they haven't done anything so far with AI adoption, what are they thinking about? You know, or how might they, you know, it's in an interview, if we were to give this situation, how might they approach that based on their own research or what they've done in their spare time? So hiring, I'm not concerned about it. You know, I don't think hiring is going to slow down. I think it's just a slightly different requirement and skill set that people are now looking to bring in at all levels.
Well, which is no real change from what it's always been, right? Like
Things
we
just
went from
evolve.
have you used, you know, Oracle or SAP to do you know how to use Xero, or, you know, have you used, you know, XYZ tool in the past? Like what are the reporting tools that you use? Like, I mean, I think as technology evolves, you still need people to to manage that technology. And ultimately, right, in finance, as with, you know, lots of areas of life and business, garbage in, garbage out still stands true, right? If the data going into your systems is either incorrect or incorrectly coded or misallocated or whatever it is, you will get bad information out and make bad decisions as a result of that, right? And I think, you know, certainly within finance, you can't afford that, and that's where you need human beings reviewing. So I think I think what it moves from is doing to reviewing. I think that's maybe the easiest, most succinct way I could put it.
Yeah. Okay. So what sort of big commercial decisions do you think finance leaders are prioritizing over the next 12 months?
Yeah.
What are you talking to your CEOs about?
It's, I mean, like the one is, you know, we've talked about it a huge amount already, but the one is like how much and what should we be spending on as far as AI is concerned? That is the decision, right? Like that is where every company is at the moment, right? You know, and we've seen that, as I mentioned, we've seen the, you know, the big numbers Uber running through their entire token budget. You know, we think token costs are going to go up. We're seeing an expansion of open source tools which are cheaper. We've then obviously had here in the UK, you know, our access to some of the models throttled. You know, not just in the UK, but globally for US models that were considered strategically too important. And so I think it's a combination of what tools should we be using, right? And what is the cost of using those tools, and what is the likely cost? And again, I just simply don't think people have understood that yet. They're starting to understand it because they're seeing the bills coming through. But, you know, up until relatively recently, they weren't. And I think what we'll see a massive spate of kind of investment in adopting or implementing AI technology within a business, and then a paring back of that, right? Because the costs become either unsustainable, or it turns out that actually we needed to hire more people to manage the tech, or it turns out that the tech is getting stuff wrong. But which I think is probably the least kind of the least likely scenario. But I think it'll all come down to how do we calculate the ROI on the investment in AI in our business. And that is just simply the fact. I mean, you were talking about hiring just before, and just to touch on that again for a second, I think the CFO of OpenAI has kind of categorically said that she will, you know, only hire in finance now people that are kind of AI first, right? So that changes the nature of not only how finance works, but the expectations, right? So not only the expectations of what they can deliver, but what they can prove, right? And so, yeah, I think over the next 12 months, the big question on everyone's mind is going to be, you know, what was our token budget? How much did we spend, and was it worth it?
Yeah, mate, completely agree. I think that's the main thing that most of our sort of clients and candidates are sort of talking to us about as well. Just effectively trying to figure out the best way to approach that, you know, and measure it, and ultimately have that conversation with the CEO. But
it's really hard. I mean, like at the moment, it is hard to measure because the benefits are surprisingly good, right? Like, or rather not surprisingly, but, you know, they are unarguably good. But the benefits, whilst being good, come at a cost. and until you can figure out where the balance is between those benefits and the costs, I think it's really hard.
Yeah.
Like, it would be overkill for me to build 30 agents into my business. Like, it just wouldn't make any sense from a cost perspective. But the 2 or 3 that I do have running make a huge amount of sense, right? So again, it goes back to this, companies that are kind of rolling it out at pace may turn around in like 6 months' time and say, okay, maybe we need to pare this back a bit.
Yeah.
So I think that's one question. I think the other commercial issue actually in today's world is, certainly in the UK, can we raise where we're going to raise from, right? Especially that, again, as I mentioned earlier, that progression from C to A or A to B, where it's become a little bit tighter, right? Let's not forget, we had a ton of businesses back in 2021, 22, and arguably at the back end of the 2010s that probably should never receive funding, right? Certainly not venture funding. They're either being shaken out of the market or they are kind of like just kicking the can along, right? But and then on the other side, we're seeing businesses potentially, or there's this phrase seed strapping has been thrown around quite a lot, where companies are raising or founders are raising one round of capital and then that's it, like nothing else, right? But I would say for most businesses that want to get to venture scale, you're going to need more funding. Like, that is just the reality, right? Because you can't bootstrap your way to global expansion. Like, maybe you can, but it's really damn difficult, right? So that's the other question. Like, what are the milestones we need to hit? Can we raise? Where are we going to raise from, right? And I think that's really tough. Like, again, one conversation I had with someone recently was, they're joining a Series B business. They've raised a bunch of capital, but they're burning more than they anticipated. Their revenue numbers aren't where they need to be. Their runway, therefore, is shorter than they think it is. And actually, I would argue that their metrics didn't even suggest that they were really ripe for a Series B, but they managed that, which is great. Yeah. So then the conversation is, okay, how do we restructure all of that, right, to get to whatever the next milestone is, and on the assumption that they're going to look for a Series C, at some point, they need to be able to prove out the metrics, prove out with their metrics that they can get there. So I think that's the conversation. I think there are conversations around M&A and exit at the moment. So both corp dev and M&A sort of acquisition, as well as, hey, we're kind of at a plateau in terms of where we can go from here. Okay, where's our likely exit route?
Yeah.
Ultimately, I think business is business. It's always the same game, right?
Yeah.
Like, can you win clients at a cheaper cost than the revenue that they're going to bring in? And that's what I think everyone needs to be focused on all the time, irrespective of anything else.
Yeah. And how many sort of conversations do you have, or you're aware of, I guess, of like, geographical expansion for businesses? Does it come up much?
Yeah, look, I mean, most of our clients will at the very least be UK, US, right? Now, depends what you mean by geographical expansion. Is that expanding ops? Is that expanding investor base? Is that expanding something else altogether? And that tends to fall into one of 3 outcomes. So US topco to hold investments, or a US opco to start a sales motion in the US, or a combination of both, right? And like, I've run or rather co-hosted a couple of dinners with Dan Glazer at Wilson Sonsini all around this topic. And, there are lots and lots of different reasons why, founders should or should not consider doing it. I think that, it's hard to talk about geographical expansion from a UK perspective other than the US. Yeah. Like, yes, Europe is there. Yes, Southeast Asia, but the US is almost always the first port of call. And frankly, it's where the market is, it's where the capital is, it's where the exits potentially are. And again, going back to my point about, what is getting funded, it's more this sort of deep tech R&D intensive style of business. They need capital, like a lot of capital. And beyond Series B in Europe, that's harder to find. In the US, it's a lot easier. I spoke to a founder day before yesterday, and he's building sensors that can measure how your tendons move and therefore kind of how you grip stuff and so on. And he's just like, San Francisco is just a different game. Like there's no, there's almost no explanation needed. It's just like, okay, we're raising this. Okay, found that sounds amazing. Let's go for it, right? So, so I think, and especially given the UK kind of outlook or whatever you want to call it at the moment, I think we have a really, really great ecosystem for venture here. If we don't shoot ourselves in the foot, it's a great place to start a business. One of the things that we're seeing is expansion into the US, potentially for sales or investment, but retaining the UK talent and operations because there is a cost arbitrage to be had there as well, right? Fundamentally, the UK is cheaper than the US for really good tech talent, right? So, I think, engineer here may be anywhere between 80 to 120 sterling. In the US, you're kind of starting at 200 plus, right? US, which is whatever, 150 sterling, right? So yeah, there's a combination of those sort of factors. But it's always been and always will be the case that capital and talent will follow each other, right? So I think that's that sits at the core of some of the expansion conversations that we're having. But yeah, I don't think that it's been any different than it has been traditionally either.
Yeah. Well, good stuff. I'm all good.
Amazing. Yeah. Well, I mean, hopefully next time we'll figure out LinkedIn Live or just not use it ever again. Maybe I need to have a conversation with someone at LinkedIn. But Alex, really appreciate you coming down to the studio today. Really enjoyed the conversation. Where should people be looking for Talent Edge?
Where should you be looking for Talent Edge? Anywhere that you're looking to hire finance, strategy, accounting across New York, London, high growth tech or media and marcoms. Yeah.
Amazing. And similarly, if you're looking for fractional CFOs, Emerge One, that's where you got to come.
Yeah.
Thank you so much, Alex. Really appreciate the time.
Yeah, and you. Cheers,
Amazing.
mate.